Time for our U.S. Bank Economic 360. This week, we're talking about the many economic statistics that the government releases. You know, the numbers that measure everything from jobs to housing to inflation to economic growth. They're often contradictory and confusing. So U.S. Bank's Jim Russell is here to help us figure them out. Hi, Jim.
Good morning.
Good to have you with us.
Yes, sir.
It is so hard to figure out what the government is trying to tell us with these statistics. Is there any one that can really give us a clear, accurate picture of economic trends in the U.S.?
Brian, it's a good question. So many economic statistics are released literally every day, as you'd mentioned. Many of them are subject to revision and are candidly a little bit inaccurate. We are looking for a statistic that is, number one, accurate, number two, maybe gives us a feel for what is happening now, and perhaps tells us what's going to happen. In our evaluation, we really look at a lot of statistics. The one that we like the most, we feel is the best, is called the Purchasing Managers Index, or commonly called the PMI Index, released on the first business day of every month. So on literally Monday, opening day, April 1st, we're going to get the manufacturing PMI. There's also a second set of data called the non-manufacturing PMI. That's going to be released on the 3rd of April. It's really a compilation of several different economic indicators, and we feel like it gives an accurate read of not only what the economy is doing, but what it's likely to do on a go-forward basis.
So the PMI that we have, that we're looking at now, the existing index, what is it showing then about where we are now and where we can expect to go economically?
Well, the manufacturing PMI has kind of ebbed and flowed, as you might expect. What you would normally see is the readings to be very low coming out of the recession, maybe 2, 3, 4 years back, and more firm trends more recently. Now, just to be clear, the red line that you see on your screen, anything over 50 indicates that the manufacturing economy is expanding, and you can see that the reading for February is 54.2. So we do expect the reading on April 1st to also have a 54 reading as well. Now, the non-manufacturing PMI is also very strong. Now, to be clear, manufacturing is 30% of the economy, non-manufacturing around 70%, so the non-manufacturing matters very much. That reading is 56. We're also expecting a 56 reading on April 3rd for the month of March. So trends are pretty good.
But our economy is so closely tied to the whole world. Is there a global index that we look at?
There is. To your point, 46% of S&P 500 revenues are non-domestic. So 54% are domestic, so it's approximately half and half. It's very important what the global economy is doing. The global PMI is showing maybe a little bit weaker trend, and the reason for that is Europe. That's a common theme that we've used on this show many times, that Europe remains in a recession. In aggregate, Europe is the largest economic entity in the world. So with Europe in recession, global PMI data is going to look a little bit sloppy. But we do like what we see, and we think that things are going to continue to be pretty good for at least, let's call it, through the spring months.
Thanks for sorting it out for us. Thank you.
Yes, sir.
We appreciate you, Jim, and U.S. Bank.